this new topic, new video. No time ago, I disappeared a little bit from the IG and from creating some YouTube videos and stuff. So it's a gift from me to my subscribers. Alright, so today we'll explain one of the most simple strategy that any beginner can use to get some profits in this fucking market, right? I've accessed that. I use it. I've accessed it. I guarantee the profit. Okay, I guarantee the profit if you share, if you follow the rules I'm giving you. So simple rules, so fucking simple. There is some complicated things, not so complicated in the end, but I think you don't need it right now. Okay, just focus on what I'm telling you right now. The other things I will create the second part where I'm going to explain the average daily range and how we can use it and apply it with the strategy to expect the movements and this stuff. Well, so that's one of the examples. That's one of the examples that you can use. What we can see here. Higher, 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 low, higher, higher, low, higher, higher. So simple structure, simple structure, but how we can use structure in a right way. Okay, I already explained structure. If you did not watch the way how I read structure, you can watch my first video. Well, here I can see price creating this bullish movement. I took that trade. If you can notice, I'm taking the trade from what? Here are losses, by the way, all loss here. I took the trade from the extreme, but based on what I expect the extreme, it's going to reverse or something. That's what we are going to jump in and explain. So let's go to start with what tools we use for that strategy. It's a game of probability, remember that. So first thing is 5 minutes market structure. Okay, when I say the 5 minutes market structure, always follow the structure 90% of the time that the price creates at the same day. Okay, start from Asia, reading structure. Don't start before that. Most of the times, just start from Asia. It's the same thing. Okay, even if you read it before, it's not false because it's in the end it's the same. Okay, it's the same, and I will show you on the live example why it's the same. Second thing is the time in London and New York session opening prices. We will use that as intermediate term prices for our discounts or premium. And on that second rule of the strategy, why I talk about the average daily range, because sometimes price can be above on a premium price on based on the daily opening price, above the daily opening price, but below the session opening price, and give you some beautiful, fantastic opportunity. That why sometimes you shouldn't know the average daily range before you trade or jump to understand that day so well. The favorite tracements, I will use the 25% and the 75%, of course, of the 5 minute range. Gets breakouts, fake breakouts in the market structure. We will use that for entry points on the 1 minute time frame. And the last thing is the two targets, the 25 or 75%. We'll explain that too, alright? So our first target is the extreme of the 5 minutes market structure, and the second one is the fib extension. That's what we're going to use. So that's the first simple and easy example. I know that everyone can see that. You could expect as simple SimC stuff. Alright, so it looks like a SimC, to be frank. Higher highs, higher low structure stuff. So simple and easy. But it's not a SimC, alright? It's not a SimC, and most of the times it's not, because we don't focus on the liquidity most of the times. This is just a basic, simple stuff for the beginners, and everyone can use it. Go back test that and show me the results. I guarantee the results. Okay, if you get below 50% win rate, I will give you 10k. Alright, go back test and record. Send me. If you get below that shit, I'm going to give you 10k. And if I did not do that, put down your story and say I am a scammer. Alright, it's a challenge. So price go and stop this important liquidity on extreme discount price. 25%. Perfect. Simply, here I have actually the Frankfurt opening price. So this is Frankfurt session, by the way. I will use the, okay, pen. I will use the opening price, and in that place, I'm below the daily opening price. Daily opening price some place here because this is Asia, and I'm below the Frankfurt. I'm below the daily, and I am on the extreme. Perfect discounts. So I have all the rules to enter here and to take a buy. You can set your stop loss here, and there is example where you can set your stop loss just here. We will explain that, and we will see the example on the lower time frame to see that more clearly. Next example, down the gold, I can see so clearly how the price creates high low, high, fake breakouts. How can I know if it's a fake or not? This is another topic, but right now let's focus on our rules only. So what is the 25% or 75% of the structure? We will trace the fib from here to here. And below the London opening price. Price here, make a fake breakout. So actually that's how it looks like in the lower time frame. It looks like that place. Looks like this. Okay. That's how it looks like. Sweep and fly higher. And that the break. So interesting. It gave me another one here, but I'm not going to take that one because I'm not below the 75%. Okay, so that the 75%, some place here. I should only trade on my beautiful golden area, which is the extremes, discounts and premium price based on the 5 minute market structure. I'm below the London price, so I'm below the intermediate term. I have intermediate term perfect price. I'm below the measure. For us, the daily opening price is the measure in that situation. So I'm below the measure opening price, I'm below the intermediate term opening price, and I'm below the session opening price. So everything is perfect. I'm going to jump for the first target. I'm going to set on the 25%. Okay, that first target here on that zone, and the second target is the -1 of the fib. Okay, I will trace the fib from here to here. So that the -1, and here where I'm going to set the second target. Before I set this target, by the way, I will hedge my position when the price breaks that shit. So here, price can retrace or reverse. Everything can happen at any situation. So what? I will look for sell here. So that the 50% I already talked about. Even if you take a perfect trade, that's not enough. You should hedge your trade, your position, and look for sell or reversal. So interesting. Go to another example. Okay, it's not that. Okay, that's the 1 minute time frame. That's how it looks like. Okay, not that. All right. So on the 1 minute, we can see this beautiful example that the first one. So as you can see, that's our golden perfect area here. So price give me this confirmation here. Take out the low, take out the high. Okay, take out this beautiful low and go grab the high. First bearish candle with mitigation, extreme discount, so I'm going to take it. It's engulfing the 30-second time frame, the lower time frame, so it's a perfect rejection. I can jump here, set my stop loss above the high, I'm close to the high, so it's a perfect area to set your stop loss safe area. And you can see that the price goes to the 25%, so price hits my first targets and continue pushing higher. Second trade, as you can see, there is no confirmation in our place here. That's after the break. Okay, there is no confirmation, so I'm not going to jump. That's our first sell. Here there is no opportunity. Here, as you can see, higher, higher low, higher high, complex pullback, New York opening price go to this perfect 75% area, so I can jump here. Price gave me here a beautiful confirmation with a perfect 2 minutes engulfing after the close. I will enter here my stop loss below the engulfing, so that the risky place you can set your stop loss in. If you want a safe stop loss, you can set your stop loss here. Okay, it's the same thing. Here, by the way, I'm above the daily opening price. Okay, so the daily opening price is somewhere here. So I was above the daily opening price and I took this trade. And the variation with the average daily range, I will explain that in the second part. So that trade was fantastic, was beautiful, very quick, very easy, very fucking simple. Everyone can understand this stuff. Not this one, okay, I think. Alright, so let's go right now to the live chart and try to see some example and backtest this simple strategy. As we can see here, so I was below the session opening price, which is the London opening price here, 7 a.m. and I was below the daily opening price, so perfect extreme discounts and the 75% of my structure. The problem here is that trade was not from take out the high, take out the low. It was 9 journal fake breakouts. Okay, so that trade was risky. I have 2 minutes engulfing candle, engulf those candles, close above this candle, so retrace to the 50% of the engulfing. So even if you take this one, that was risky. Okay, because you take it based on external liquidity, not internal one. So you're trading the protected low and you cannot know if this low actually is protected or not. But on these examples, so price go too much down, create new structure. I'm going to follow low, 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 high, low, 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 high. Always follow the last structure, price respecting. Forget the old one and follow the new data. Low, 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 high, no confirmation, no confirmation, no confirmation, no confirmation, no confirmation, and I'm not on the 75. Here I have a confirmation, perfect confirmation before the New York opening price. You can see here how the price go to the 75, the golden place, tap into the swap, this beautiful liquidity, fake breakouts, smart money trap zone, and beautiful trending here. You can set your stop loss here, the risky place, or you can set your stop loss here. Not the most perfect risk reward ratio, so I would prefer to set my stop loss here and to take the risk. So yeah, price go directly to our next. So the first partial is here, first target, second target is here. I'm done for this day. So fucking simple. The max daily loss I will use in this strategy, the max daily loss is 3 hour. Okay, and my target is 4. So fucking simple. Here, this spider pattern or this fake breakouts form on internal place, not external. That why this one is high probability and more perfect than this one. This one on extreme liquidity, minor liquidity. I don't have any fucking confirmation here. I'm not going to jump. Here I have one. So price go too much down. Break these lows, break these lows. So here is the same thing. If you try to jump, you will take some losses. Alright. Here take the external. Here take out the external. So what? You can take this one, it can go with you, but most of the times you will take tons of losses if you try to follow the external. That's why I suggest to follow the internal patterns. So price create that low, make a fucking movement, then it give me a pattern. So I understand that low probably is the protected low in this beautiful example. What happened after that? Here my stop loss below this algo candle. Okay, it's algo candle in the beginning of. Alright, I will set my stop loss like this. Price sweep this lows, and boom, I'm done. 2 beautiful wins. Let's see another example here. Another one. Low, 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 high, low, low. Of course, I'm below the session opening price here, which is the London opening price here, and below the daily. Okay, I'm below the daily, I'm below the session, so I can jump. I'm on my golden area based on the fib. I choose this structure because it's the most simple. I always choose easy and simple leg. You can choose this one, can choose this one too. It's not wrong. On Asia forms, low, high, clear retracement. So you can choose this one or this one. It's the same thing like I told you before. Both is correct. Break that low. Give me a beautiful opportunity here. Shifts. And what? Okay, I think take out the high, take out the low. Algo candle with beautiful inducements here. Sweep it. Not the most perfect pattern, but you can use it as well. Beautiful engulf. Risky a little bit, but you can jump. It is very. Here I have a beautiful sell opportunity. Okay, as you can see, if you did not catch this one or you see this one, a risky one, you can go with the second one, which is this one, 75% above the London price. So, but I'm below the daily, so I'm in a discount based on the daily. That's what I told you before. You can take it. On the second part I will explain the average daily range, by the way, so you can understand the difference when you should take this one or not. So like this, take out this low, serve this liquidity inducement, minor one, perfect sell. Same thing you are going to apply here. Take out the high, take out the low. External is a little bit risky. Okay, it's a little bit risky. Take out the high here. Okay, but I'm still inside this 5 minutes range, so maybe I can jump because price did not take out. I have the engulfing, I have the mitigation. Yeah, I can set my stop loss here. Price did not take out that low yet, so it's external on the 1 minute, but it's internal in my 5 minute range. I'm not below that low. To see that in external trade as external trade. Perfect. Same shit. Again and again and again. Take out the high again. I will apply the same thing, but before price take out the high. I can see this one. Let's see if this one is a valid loss or not. Alright, it's not. As you can see, it's not. Take out the high, go take out this low retrace. Very interesting. Beautiful minor build-ups. Break this low, take out the high. New sell here with the events. So stop loss here, mate. Your stop loss, you will take a stop loss here. But before that, you get 5 error perfectly here, 5 here, and 2 here, literally 3. Alright, so you're done. Always focus on a consistency, okay? Repetition. It's not about what you are going to make today or tomorrow. It's all about the end of the month. So in the end of the month, if you make some fucking cash, some fucking money, you are a profitable trader. If you're not, you're not a profitable trader. So fucking simple. So fucking easy to understand. It's about the end of the month. So I prefer to make even 8 or 12 per week than taking 100 fucking deals, and in the end of the week I find myself in a break-even position or something like this. So I see some kids and some gurus sharing some stuff on IG, some funny stuff about trading. They don't understand what they are doing either. They have no relation with the trading. They start on 2020. So you should learn a lot of things, alright? You should just learn a lot of things. Other people just copy paste. They are content creators. They are not traders, alright? They are content creators. That's all what they are doing. They are not traders at all. So we'll check the last example on the Nasdaq actually this week. What happened? I can see so clearly the 5 minute market structure that I mark here. Higher high, higher low, higher high, higher low. Perfect structure, so fucking clear. As we can see here, that the price swap and go to the 75%, create this beautiful fake breakouts in the market structure on extreme discounts. Here I have the daily opening price, alright? So I was on the daily opening price plus below the session opening price. I don't trade Asia, but if you trade Asia, it's perfect. You can take that by here. Okay, so let's go right now to London session to see what happened. Alright, so we'll end the day before the day start. Perfect stop losses, like I told you, below this place. First target is here, second target is going to be here someplace. So that leg. That's what I was talking about. If you try to trade the external, that risky. Alright, that shit is risky. If you try to trade the external, you should understand that you are going to take some stop loss. Here I have no external clear fake breakouts, but I'm just telling you. See how much price hold and was just building up some liquidity. No need to Price create the high, the protected 5 minute structure high. Go lower. Perfect. Inducing the high. Perfect inducements, perfect fake breakouts. So I can use the as entry I have engulfing this candle, engulf this one. So I can take that sell. Actually. Alright, so like that. My stop loss on the 5 minutes. I'm on extreme discounts, of course, and I have internal inducements, fake breakouts, so I can use that as an entry points. First target, like I told you, you can set the first target on the 75%, which is here in some place. Alright, okay, let's see what is the 75%. The extreme discounts, it's our targets, so is here. Perfect risk reward ratio, okay, 10. Can I move my stop loss to the break even? I move the stop loss to the break even most of the times if I edge my position. Alright, if I edge my position. If I don't, I can do what? I prefer to take a partial someplace here. I will close a partial from the trade and keep my stop loss at the same place. So even if the price hits my stop loss, I'm not going to lose. It's going to be a break even trade. Here I have what? Low, 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 high, low, 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 high, low, low, boom, take, all these fucking beautiful build-ups. And I have this clear fake breakout and this beautiful trap zone that price creates here on extreme premium plays in the market. I'm above, of course, the session opening price because the session opening price is here, the London opening price, so I can take that deal and go and try to look for sell, of course. My stop loss above the 5 minutes. Extreme premium place. Take out all the smart money. People using structure and waiting for breakouts on the structure and this stuff. Alright. Tap into the trap zone and keep going lower. Price here went to this extreme discounts, so same shit repeats again and again and again. There is a beautiful example, so this inducements here. So here if you try to take a buy, look at this beautiful scenario. If you try to take a buy here, first bullish candle, even if you don't have any fucking clear mitigation here, but let's say you have the mitigation because sometimes that scenario happen, and you set your stop loss here, price going to hit your stop loss, boom. That's why I'm telling you, the safest place to set your stop loss is on this low or below this low a little bit. In that situation, I'm too close to this low, so even if I move my stop loss here, it's going to be fantastic trade and nothing wrong in this. It's about the results. Boom. Price retrace again to this to the 75%. Same fucking shit I'm going to repeat here. I don't prefer to use this one because swap this liquidity on the 50% or where. Let me check if the pattern is going to be perfect or literally on the premium. Yeah, so price swap this one, create that pattern on the 50% of my structure and make the break, induce, so it's going to be correct to take that deal. Totally correct. First bearish candle mitigation here, my stop loss above 5 minutes. I'm too close to that, so I'm going to move it a little bit above. The same thing what I did here. So here we go. Look at this fantastic opportunity with so fucking simple strategy. The most simple shit you can use. Alright, let's see if all the trades is valid. Yeah, all the trades is valid the same session. So London opening is here. I'm above. I'm on the premium of London and the structure of the 5 minutes. Discounts, premium, perfect premium plays, perfect discounts, trades. So all that shit is totally valid. Only this one because that one was above the daily opening price, but it's valid because I'm below the session opening price. You can decrease the risk. I'm going to explain later the average daily range and how when this trade is high probability or not. Boom, booming lower, breaking that low, structure, same shit. Let's see. I don't have any entry here. That's what I'm telling you. Trying to trade the external is too much risky, and I think you can from time to time catch some trades, but most of the times you are going price going to hit your stop loss and take you out from the markets. So I don't suggest that. All right. So price take all the structured lows, goes to this algo candle on the hard time frame, rebalancing some imbalance, fair value price. Here I have what? Same shit. Internal that the protected low on the 5-minute time frame structure. Easy and simple. Okay, you can see the stop loss here. The risky stop loss is below this algo candle, if it's below like this. So be careful. And what? Booming. Price just fucking booming. I'm not going to set the target like that. You're going to set that target someplace here because of the 75% extreme premium place. And you can see how the price just goes, hit the targets, take all these lows and boom, retrace. We don't trade in this area. Ignore those trades. It's not the best. Whenever you try to trade on the equilibrium level, it's the worst place you can trade in. You will see a lot of ranging stuff. You will see a lot of bullshit stuff. You will see a lot of things that's making no sense. Okay, making no sense. All right. It's all about cheap or not. It's all about that. Try to buy. You need to understand when the price is cheap. So fucking cheap. That's the best idea. That's the best thing you can follow. So simple thing. But pay a lot. Let's say this trade is valid. Okay, it's before new opening price. Here you look for sell. Same stuff. Take the low, take the high. Extreme premium place. Yeah, but I break that high. So it's external. It gave a good trade, but it's so risky. It's so risky. Because you're trying to take the entry from the peak, from the top of the movement. And that's the baddest thing you can do. Thank you so much, guys, for this video. I hope you liked the video. I hope you liked it. And